this needs to exist, or I believe this needs to exist because emerging managers, early stage investors play such an important role in the innovation economy. But two, I just love doing it, right? So maybe even if someone was mission driven or believed in the cause, maybe they wouldn't have persisted so long, because it's hard to fake doing something for like 15 years, right? Some people do it, some people have to do it, right? I think we're in a very privileged, luxurious position to be able to choose what we want to do. Some people don't have that choice. But if you have a choice to do what you want to do something that, yeah, is impactful and for a bigger cause than just yourself. And that's, I think, makes the mindset rather easy.
Before starting your cohort, you published 2 books. And I believe during writing, you already have a solid idea, and you started to convince your community and started to your Coolwater Capital. And in a few years, keeping original idea, of course, you, as you mentioned, iteration, believing your first, like a conviction, it's so difficult for not only you, like for all startup founders, right? So tell us something. How did you keep your mindset in like a long term, like consistency, continuously? What do you think?
Yeah, it's a great question. How did I keep my mindset over time? And I think I'm no different, right? I think in terms of mindset, what do founders want? They're relentless, they're obsessive, they're resilient, and they, if they're going to be successful, or if they're going to have a shot at being successful, they have to be mission driven, right? And I think if Coolwater is ever misunderstood, I think it's for the fact that people don't think of us in the context of being mission driven. But if they do, then they realize how easy the mindset is. If you believe that the best talent in the world should be supported, if you believe that the best investor talent, if you can help the best investor talent be even better, and that leads to better outcomes and superior results, both for innovation, but also for investment performance, right? Then I think the mindset becomes very easy, and the understanding of Coolwater and why we do what we do becomes a lot easier, because it's like we believe in finding the best investment talent, making it easier for that investment talent, and doing it in a systematic and scalable way, right? That's the only way to improve outcomes at scale. And it's fun to do that. I find that really fun. So maybe that's another element of mindset where some people wouldn't necessarily find building like back office programs and building a fractional CFO business and doing kind of finance and CFO work and strategic CFO work and doing strategic advisory for what it means to build a great fundraising strategy and to build kind of very specialized curriculum to build, to understand how to build an investment firm. Like, what is investment management? What is fund management? What are these institutional investment concepts like fiduciary responsibility and portfolio construction? A lot of people probably don't find that interesting. I love it, right? And so I think the mindset piece is, one, it's the mission drivenness of this needs to exist, or I believe this needs to exist because emerging managers, early stage investors play such an important role in the innovation economy. But two, I just love doing it, right? So maybe even if someone was mission driven or believed in the cause, maybe they wouldn't have persisted so long, because it's hard to fake doing something for like 15 years, right? Some people do it, some people have to do it, right? I think we're in a very privileged, luxurious position to be able to choose what we want to do. Some people don't have that choice. But if you have a choice to do what you want to do something that, yeah, is impactful and for a bigger cause than just yourself. And that's, I think, makes the mindset rather easy.
Thank you so much. I love that. Yeah. Like super basic, loving what we believe and doing. This is so important. Okay, so next, let's talk about your Japan cohort. So Why Japan winter?
Yeah, a few reasons. So one, that's where the opportunity presented itself, right? We knew as Coolwater we wanted to expand. We ran the program for multiple years and realized that there was talent outside of the US, investment talent outside of the US, but that talent, it was harder to get them to come into the US cohort. So if you can't get someone to come to you, go to them. So the opportunity kind of presented itself. In terms of the macro, Japan is, depending on which data source, the third, fourth largest economy in the world, massively sophisticated in terms of technology, amazing sophistication. In terms of the startup ecosystem, it's more heavily corporate. And so where we think of Coolwater positioning itself, we can help corporates, we can help people spinning out of corporates, but there's another part of the ecosystem of independently operating venture capitalists, right? So they're different than corporate venture capitalists. Corporate venture capitalists typically have a strategic mandate. Independently operating venture capitalists are more financially oriented, meaning they're trying to generate returns for investors. And if you generate returns for investors, those investors typically reinvest into that. And then over time, right, that gets bigger. And you've seen that play out in Boston. You've seen that play out in Silicon Valley. You've seen that play out in some of the best ecosystems, venture, startup ecosystems in the world. And so I don't think it'll be any different in Japan. But it felt like, from the macro, there are a lot of good things going for it. From the what is missing in Japan, it felt like this type of program helping fund managers, investors understand what it means to be an institutional fund manager. To your point, kind of your mission, like what it means to connect with international network and international LPs, US LPs. It felt like it was missing an understanding of best practices. Like a lot of those probably come from the US, but best practices can come from other places as well. But in terms of like the biggest and most sophisticated venture ecosystem in the world, that is in the US. And so similar to, again, how 500 Global thought about it, how Techstars thought about it, right? Like you could package innovation, you'd have to adjust it locally, which is what we did with the Japan program. But you could package this idea of, hey, the biggest and best funds in the world were kind of born and grew up in Silicon Valley in the US. So again, how does the best practice look? And then like, let's take that to Japan and help these smaller funds so that ecosystem can thrive more and more over time. So we noticed there's a great economic story there. We noticed there's a great startup story and technology story. We noticed a few gaps in the market, and we were very fortunate to find Yusuke-san and others that were able to believe in our program and believe in what we could do to help the capital markets locally in Japan. And it was very exciting to launch last year and continue to work on the program this year.
Thank you so much. As you mentioned, like a few gaps. So from your observation, what is the kind of a differentiation between Japanese startup ecosystem and like investors kind of a mindset between Japan and the US?
I love how you talk about mindset so much. I'll answer that question. I'll also kind of retouch on another question you didn't ask, which is just like what fundamentally is the difference. I think it gets to mindset. But I think what I've seen, right, and again, I've been working in the Japanese ecosystem pretty consistently for the last 2 years. So that's my perspective. I've been investing into venture and investing into Silicon Valley for the last 15 plus years. I've made over 200 fund investments in those 15 years. But from a Japanese perspective, I'm relatively newer, right? So if there's audience out there listening, just note that this is kind of a fresh eyes, fresh perspective on kind of what's going on here. But I think the big differences are there's hundreds of funds, but there aren't as many big companies, right? And so I think what's happened in the US, there's great universities in Japan, but there's not as many big companies, and there's not as many successful venture funds. And so in the US, what happened and what built the flywheel is great universities, great technology development, great success stories, big success stories, right? And with the big success story, you not only get kind of an amazing C-suite and an amazing founder team that, you know, becomes this next level and everyone looks up to them and they're able to kind of advise on like how to build the next big company. But yeah, you're not getting that in Japan. There just haven't been enough unicorn outcomes. And so, and I've seen this in other ecosystems. Like I started investing into Israel like 15 years ago, and it, you know, going over there a few times, like I feel like it existed there. It exists much less now. I think they've become more dominant as a prominent technology development ecosystem and investment ecosystem. And, you know, they've definitely become a global player, more of a global player over the last 15 years. But 15 years ago, you'd go there and you'd find founders who wanted to sell their company when it was 20 or $40 million. And I think Japan has this dynamic, right? There's people that could speak a lot more knowledgeably about it than I can, but there does seem to be this mindset and this market dynamic of, if you can IPO at a smaller IPO, you do that. Or if you can kind of sell to a corporate and it's a small win, like you do that. And those opportunities, I'm not saying that's the wrong thing to do. I'm saying those opportunities for the founder can be very attractive, but for the ecosystem, they can be shortchanging the ecosystem from a medium and long-term perspective. And so getting to, and I think, right, like, because a lot of the capital comes from corporates, it's strategic. And like the reason you're investing is because that business can be acquired. It can become kind of a business line of the strategic, of the corporate. And so the type of investing I think that has happened is different than some of the independent, you know, contrarian, anti-establishment investing that has happened in the US. And I think that's like a key shift in mindset, where what if you had a unicorn founder in Japan that wanted to start a venture capital fund? Please call me at Coolwater, right? We would help you incubate that. What if there was a very successful operator, C-suite person that helped grow a company in Japan into hundreds of millions of dollars USD in revenue? Call me. You should have a venture fund, right? It's that mindset of like, what does high growth look like? And then it's also the mindset of like giving back into the community because it's your responsibility, right? And what happens is like maybe what's happening is you're successful, you make all this money, congratulations, and you move on. You've missed such an exciting opportunity to like give back to the ecosystem. And I think the special mindset and culture of Silicon Valley is some people are okay if like a portion of their give back goes to zero, right? You have more angels, you have more risk on behavior, you have more people looking to change the world through investing. And I think that mindset, what we're trying to do is encourage more of that behavior, more of that risk on behavior, encourage more of that frame of mind of, yeah, if I take 10% of my net worth, I've already had a great exit, you know, I can build up almost option value. Like, and maybe you love investing. Maybe you realize that you've been awesome and you've sold a big company and you've done all these great things and you start angel investing. You realize you love giving back to founders. These are your people, right? Instead of having to like have an inner dialogue all day long with yourself, maybe you can have external dialogues all day long with 20 people that are very like you. They're very ambitious. They want to build big companies. That I feel is more like a responsibility, but it's also, to your point, a mindset, right? It's getting the right people that really understand venture. They really understand high growth. they have great skill sets. They take it on as like almost a burden. It's like a responsibility to give back and to help build the ecosystem. And it is an ecosystem. I can't build it myself. You can't build it yourself. Jetro can't build it themselves. Like a single fund can't build it themselves, right? Sequoia doesn't invest into every single unicorn. So it's right. It's an ecosystem that wins at the end of the day. And I think changing the mindset, finding more people like that, independently operating investors that want to build very big companies, right? Those are the people we want in the Coolwater program. And I do think that is a shift in mindset for a lot of investors in Japan right now. I don't know if you agree or disagree.
I love that. As you mentioned, like give back, like pay it forward. This mindset from a Silicon Valley successful founders and also investors, I really love it, and I really want to learn from them.
Yeah. Do you agree with that, or how do you see the mindset difference between Silicon Valley, where you spend time, and Tokyo?
Basically, I really agree with you. And thanks to my podcasting, I interviewed over 100 founders and also investors. So, and from Japan. So often they say the reason why Japanese founders startup couldn't make kind of unicorn or couldn't go to the US market successfully, because they say there are no playbook or like no example. That's why maybe mindset, they feel in Japanese market still okay, so we don't need to like do more ambitious because of here already good market. Why we have to like do risk? This is kind of their, I won't say it is good, but they often say that. So especially big corporate.
Well, if you put it in a historical context, right? Like, would Japan and the US be better off if we didn't have the Industrial Revolution? Would society be better off if we didn't have the computer or the internet, right? Or electricity and power, right? Or maybe AI is kind of the next wave. Like, so I think if you think about it, because I think a lot of investors, when you're trying to convince them to come into the space, or when you're trying to convince someone to change their way of thinking, it's very hard to change someone's way of thinking, in my experience. I do think the simpler you can be, and just like the more just the more simple you can be in like thinking like why would I give back to this ecosystem, right? Because technology development is important, right? It might be one of the only true consistent forms of progress, if that's what you care about. If you don't care about progress, it's going to be like very hard to convince someone that they should be investing into venture and investing into technology. But if they do care about humans and they care about progress and human progress, this is an amazing asset class to do good while making good, right? Like you can make a lot of money and do good at the same time. And I think that's a big theme right now in Silicon Valley and in a lot of like both for allocators and for GPs, especially with AI, right? Because the concepts around AI that come up involve discussions of morality, and so you have to sometimes almost become more philosophical if you're investing into venture, because it's not just like, do I need another widget company, right? Someone needs to eat. Do I need another widget food company? Probably, because there's more people in the world and more people need to eat. And like you could start another whatever restaurant, and that you've done good. Are you going to have massive upside? Maybe not. Maybe you could build that into the next generation great restaurant concept, but more likely than not, like that's accretive to humankind, but it's not massively impactful. And so I think, right, like when you start to play in venture, you start to think of people like the growth mindset. You start to think of, okay, what is something that enables change? And then what is something that enables change at scale, right? And the venture piece, that's why I talk high growth. Like venture it's business building, but it's not just building a business. Because if you look at the stats in the US, for example, there's so many more tens of thousands, if not hundreds of thousands of companies that are built every year that are not VC businesses than are VC businesses. I think there's something like 15,000 VC-backed businesses a year in the US. There's, I would argue, hundreds of thousands, if not low millions of small businesses in the US. So, right, like venture is a very small part of a very big pie of businesses. And the same thing, if you take it to Japan and what we're trying to do, like going back to your mindset question, is have people understand that there is a difference between building a business and building a high growth business. And therefore there's special skill sets, which is why in Silicon Valley, you have these revered founders who've built great companies and they come back and they become partners at Sand Hill Road firms and they become advisors to the next generation of great founders. Like it goes back to, that is the ecosystem being built up. I need partners on that. Like if you're asking me kind of what Coolwater's pain points are, it's finding those people that actually want to give back. And, we're trying to serve as an organizing function for that ecosystem, right? We don't have to sit at the center of it, but we do have to try to enable those dynamics and enable that ecosystem. So those founders, if they want, can start VC firms. Those founders are connecting with other like-minded people that, again, want to operate in this very high growth and impactful part of the economy, right? If you just want to build a business, fine. If you want to build a super scalable, high growth business, that is venture. And that's what we're trying to do. And those people we're trying to identify.
Thank you so much, Winter. Okay, last question. If I remember correctly, you are looking for a program manager, correct?
Yeah, so we would love to find more people to bring into our orbit, specifically as we launch the second cohort with Jetro in Tokyo in 2025. We'd love to find one or two more people to start on the ground in Japan, ideally in Tokyo, that are bilingual, that can speak Japanese fluently and can speak English fluently. I think that's a very important hire. So yeah, we'd love to talk to anyone that's interested in that role. We've just kicked off recruiting for the second cohort, literally in the last days. So if you're a aspiring investor, again, if you're listening, you're a founder, you're a great operator, you've built a big business, a high growth business, we'd love to talk to you. We can help you incubate your firm. If you're already out there, right, and you feel like you're underserved at the moment, like there isn't a community for you, but you want to build the next generation great firm, we'd love to talk to you and have you potentially come through our second cohort for the Coolwater Jetro program.
Everyone, if you are interested in helping a cohort in Japan, please reach out Winter's LinkedIn.
I've got one more. If you're an LP, you want to figure out this space and you think there's some interesting golden nugget of small funds may indeed outperform, we found some great ones in cohort 1. And I think we're finding some great ones in cohort 2. So if you're an LP out there that's curious about investing in the smaller funds or investing in the smaller funds and wants kind of a bigger top of funnel, we'd love to talk to you. We'd love to host you at our events. So yeah, please reach out. And thank you so much, Kaori-san, for this interview.
Thank you so much, Winter. So let's talk soon.
Thanks. Bye.
The 3 key takeaways from a conversation with Winter, part 2. 1. Purpose fuels long-term consistency in founders. Winter stayed committed to building Coolwater Capital for over a decade, not by focusing on himself, but by attracting to mission bigger than him. He believes in identifying and supporting the world's best emerging investors to improve global innovation outcomes. Example, instead of just building a business, Winter saw himself as creating a system that helps the world's best innovators, investor, talent succeed. This sense of purpose made it easier to persist through ups and downs of launching something entirely new. 2. Japan has huge untapped potential, but needs role models and risk takers. Winter saw that Japan's startup ecosystem has sophisticated technology and capital, but lacks unicorns, success stories, and founders willing to build high-growth companies. Cultural caution and a smaller appetite for risk holds the ecosystem back. Example, many Japanese founders still aim for small IPOs or corporate exit. Winter wants to change that mindset by encouraging founders and C-suite operators to reinvest in the ecosystem, just like they do in Silicon Valley, and start their own venture firm. 3. Venture is more than business. It's scalable impact. Winter sees venture capital not just as an investment tool, but as a vehicle for massive scalable progress. He argues that if you care about human progress, investing in innovation, especially in early-stage high-growth companies, is one of the most impactful things you can do. Example, supporting AI, clean tech, or next-gen healthcare through venture capital has a higher potential to transform society than simply starting another local business. Coolwater aims to find a support those who want to build that kind of changes. Okay, thank you so much for watching our episode today. We hope today's conversation will help your future and career. If you like it, please subscribe us and give you a like. Okay, thank you so much. Bye bye. またね。チャオ。